Good afternoon, everyone, and welcome to this WIOA Wednesday webinar. My name is Kirsten Bayer with the Illinois Center for Specialized Professional Support at Illinois State University, and I will be the moderator for today's webinar. Today's topic is information about the requirements of the one-stop operator agreements. Just a couple of housekeeping things before we get started today. As a reminder, all participants on this webinar are in listen-only mode, and if you have questions as the webinar proceeds, please post your question in the chat box or the Q&A box, and we will answer those throughout the webinar as well as during a Q&A session at the end of the webinar. Another housekeeping thing is that this presentation is being recorded, and any materials presented during today's meeting will be available on our website, icsps.illinoisstate.edu, and on the Illinois WorkNet website within 48 hours. You already have access to today's presentation slides and the one-stop operator document that Bethany and John have provided for us today. You can access those through the website that I've posted in the chat if you would like to download them and follow along. Tomorrow, each attendee will receive a follow-up email, which will include a survey asking you about today's webinar. And I will also give you the link to that same survey at the end of the webinar today. If you have 5 minutes out of your workday to please provide us with feedback and suggestions, our WIOA professional development team would really appreciate it, as well as Bethany and John would love to know your feedback. And with that, I'm going to hand it off to, or I'm about to hand it off to our presenters. I apologize. We're going to start off with our polls that we do every Wednesday or every WIOA webinar. It's Thursday today. Our first poll is just where you're joining us from today, so your local area. So we'll give everyone about 20 seconds to answer this poll. Okay, so it looks like we have a good span across the state joining us today, sprinkled all across the state. So welcome everyone. Thank you for taking the time out of your workday to learn with us. And then our next slide is just which partner do you best represent? So if you could answer that one for us. Okay, so most of us are joining from Title I today, but we have a few sprinkled through other WIOA partners and stakeholders or our state or local workforce innovation boards. So welcome to everyone. Again, thank you so much for attending today. And now I will hand it off to our presenters today, Bethany Yeager and John Barr.
Good afternoon, everyone. We have one more poll for you. We know that the subject of this webinar is the one-stop operators, and that we want to know what model you're using in your local area where you are representing today. And we know WIOA allows a few different types of entities to serve, so just please indicate which one you currently use. That will help us understand your perspectives today.
Okay, we'll give everyone about 5 more seconds.
Okay, thank you. So we have a mix also of consortia and nonprofits and single entities, public and private. So that's good, and thank you. That's helpful for us to understand where you're coming from today. So today is split into 4 sections. We think this is a good time to provide just a refresher, look at the background. Also, then look at 3 pieces of one-stop operators. One is focused on the procurement requirements and best practices. The other is focused on the actual agreement of the one-stop operator agreement between the local workforce board and the one-stop operator entity. And then the third one is payment provisions, which we've talked about before recently with the supplemental guidance to the governor's guidelines and how that interacts with your MOUs and annual budgets. So that's the fourth section of today. And that piece, we know it in the webinar that we presented on November 19th, the last segment was cut short just from technical difficulties. So we'll revisit that today as just to finish off the conversation about the new parts of the one-stop operating budget spreadsheet and the one new area of content related to the MOU narrative. So that's what's on the agenda for today, and we'll get started. This webinar is really, like I said, to dust off the WIOA regulations and the federal guidance. We know that you are all probably familiar with Training and Employment Guidance Letter 15-16. We call it TEGL 1516, and that is about the competitive selection of the one-stop operators. So we're going to revisit some of that content, offer some additional resources and citations, and we want to highlight the requirements to provide resources for you to consider in your next procurement cycle, whenever that is. And how can you ensure that procurement is transparent and competitive, and that the payment terms are clear, and that the ways any partners are contributing towards those costs are clear if it's a shared cost. And we also want to make sure that this is one step, one resource for you that will be ongoing, because this is one way that WIOA interagency teams are providing technical assistance to you all in supporting local workforce boards and the required partners in addressing some of the corrective actions that were required by the U.S. Department of Labor in response to some recent monitorings over the past couple of years. So some activity here is supporting those corrective actions. This is an additional way we're trying to provide some refreshers and training for anyone who could use that going into the next procurement cycle. But it's also just a good time to consider best practices. Maybe if you've been doing things, let's see if there's another way that might add clarity and standardization to your process. So the first part, we'll start off with just some background. And this is, for those of you who have read TEGL 1516 many times, this will be familiar to you. If you haven't read it, this will be a good training. But that's the main structure of what we're talking about with this background. We'll talk about the requirements related to just one-stop operators as defined by the law, and some prohibited roles, and then some eligible entities, just again as the refresher. So I touched on this, but the corrective actions that the U.S. Department of Labor sought are on the right-hand side of the screen here. And they are really to ensure the local workforce boards award the funds to a selective bidder as a result of a competitive procurement process, number one. Number two, we want to clearly identify any invoicing of the payment process of how those one-stop operator services are paid for. And third, and then ensure all local workforce boards award the funds to the selected one-stop operators with the evidence of an exchange of funds. And you all have heard us say this before on previous webinars, that what the exchange of funds means is under conversation with the Department of Labor. But we are offering some mechanisms that can be used now until you hear otherwise, and the supplemental guidance speaks to those. So we'll revisit those. And that's the nature of how this technical assistance in this webinar came to be. The note here, the only other note here is that anything we talk about today applies to any model of one-stop operator that you use, whether that is a consortium of partners or a single entity, public, private, or otherwise. So these are applicable to all. There are some concerns that are based in the consortium model, but anything we talk about today applies to all. So please know that. And the entire underlying piece of this is that the procurement of a one-stop operator cannot favor one type of bidder over another. It has to be a competitive procurement process. So anything, again, that we talk about today will be in the vein of ensuring fair competition. And then we'll talk through the rest of that, but that's the background of how we got to where we are today. So the background about the one-stop operator, the basic role, what is it? It is to coordinate service delivery of the required partners throughout the workforce system and the service providers. And the local workforce boards can establish any additional roles on top of that. So that role is defined in the law, as the citation says at the bottom of the slide. But then local workforce boards can also say one-stop operators might be well positioned to serve in additional roles. For example, the 3 dot points on the slide are coordinate the service providers across the system, bring the primary provider of services within the center, and then coordinate the service delivery across multiple centers or access sites, throughout the local workforce area. So those can be defined, further defined by the workforce board and in cooperation with the partners. The next here are some reminders about what the one-stop operator may not do. And many of you who have filled out MOUs in the past 4 years know these very well because they're spelled out in the MOU. They're also spelled out in your one-stop operator agreements most likely. But it is important to know that the law defines roles that the one-stop operator may not do: convene system stakeholders to develop the local plan, prepare and submit the local plan, be responsible for oversight of itself, manage or significantly participate in the competitive selection of itself, and negotiate the local performance accountability measures, and then develop and submit a budget for the local workforce board activities. Many of these prohibited roles relate to avoiding a conflict of interest. And that is probably the underlying theme of all the items that we'll talk about for the next couple sections. The next slide is about the types of entities that can serve as one-stop operators. And many of you are already familiar with this because you know what your entity is, but it is defined by law. For those who don't know, it can be a government agency, or, for example, it can be a county, or it can be employment services under the Wagner-Preiser Act, or educational institutions. Sometimes it's career and technical education schools or community colleges, community-based organizations, so it can be a nonprofit or any other type of workforce intermediary. Other organizations capable of carrying out the one-stop operator duties. So the law gives some examples like a chamber of commerce or a business or labor organization. And then private entities can serve as one-stop operators. But there are some, on this slide, there are some entities that you have to comply with, even though a for-profit entity could be a one-stop operator, that it doesn't mean that you wouldn't have to comply with procurement standards and other standards laid out in the uniform guidance that applies to any entity that receives federal funding, federal grant funding, federal formula funding. So yes, even for-profit entities have to ensure that the profit is reasonable and fair for their services. The profit is based on efforts and risks needed to achieve the performance goals in the local plan. And then during the procurement, the local board and the bidder have to separate the amounts that are intended to pay for the costs for the actual services versus any profit cost. It just needs to be very transparent about what that profit is to ensure that it's reasonable, fair, and all the other requirements are baked into the uniform guidance. So the full contract price has to be spelled out, that it's the intended cost plus the profit, and that both parts of that equation have to be clear. So this is another poll we want to ask before we get into the next section about procurement. We want to double check when your local area will enter into or expects to enter into its next procurement cycle, knowing that local areas are different places in their one-stop operator agreement terms. Okay. Looks like so many of you are preparing to start your procurement this upcoming program year. So starting in July 1st is the new program year. So that's helpful to know. We also have some that will be a year after that, and then a year after that, and then even a year after that. So it's good that you can be helpful now because there's some immediate considerations you have, but also preparing for your next procurement. So that's good. Thank you. So this next section is about the actual procurement process of one-stop operators. And we know we need to make sure that we touch on the local board role, the timing considerations, how the uniform guidance kind of frames the procurement process and needs to comply with those uniform guidance requirements, and then how to avoid some conflicts of interest and best practices there. So local workforce boards, it's pretty clear, spelled out in the law and emphasized in the TEGL 1516 that on the next slide there are 4 dot points that spell out the local workforce boards and the requirements. It is the board responsibility to ensure the competitive selection of a one-stop operator. It's also the board's responsibility to evaluate the performance of a one-stop operator to make sure that it's meeting the needs both spelled out in the agreement and of the local workforce area. And then also using the local procurement policies and procedures. So it's the board's responsibility to ensure that whatever procurement method you use, it not only complies with the federal requirements and state requirements, but also the local procurement requirements and policies and procedures. And yes, then that's the 4th dot point, is ensure it also complies with the federal requirements under the Uniform Administrative Requirements, and that's, many of you know that as 2 CFR Part 200. That's really where it's spelled out what the uniform guidance is. This is really taken directly from the TEGL 1516, and the competition is intended to promote the efficiency and effectiveness of the one-stop operators by providing the mechanism for the boards to regularly examine the performance costs and compare that against the original expectations. So that's a direct quote from the TEGL, but that's the why all these things are required. And I guess the bottom line is, the point is to continuously improve on performance and the integration that's a core principle of WIOA. So the timing is competitive selection has to occur at least every 4 years. It can occur more frequently, which is why we wanted to understand where you are all in your procurement cycles. After that, uniform guidance spells out on the next slide that the written policies, procedures for that and the timeline for procurement have to be very clear and known and documented. The uniform guidance also requires that the procurement has to be open to competition, again, not favoring one type of bidder over another, and the bidders have to have sufficient time to respond to any request for proposals if that's used, or any quotes that are sought, or any other procurement method. There just has to be a legitimate process for the procurement. And in no way can competition be restricted. So I mentioned there are a couple different ways to go about this procurement. One is a sealed bid. The other is competitive proposals, which many of you have used requests for proposal. And then the last resort is a sole source, and that's only when certain criteria can be met and it's not desirable. John, would you like to offer some examples of how based on some recent information we've received from the Department of Labor about the procurement of one-stop operators, is there anything else you'd like to offer about allowable methods, and especially related to whether an RFP is required or not?
Yeah, and so I think on the next slide we're going to kind of walk through those, and that's perfect. Yeah, so it was noted recently by the fiscal folks at the DOL regional office that procurement has a number of different methods, and it could be micro purchase, simplified acquisition, or a formal RFP, and that's all laid out on this slide. One thing that the fiscal folks emphasized was that the simplified acquisition thresholds at the federal level have increased significantly, and that this could potentially be an option for going through the procurement process. We're still analyzing that information that we received. I would strongly caution everyone in their selection of the method to follow the key word of the day is competition, right? So if you look at Teagle 1516, right, their competition is, if you did a word search, there's probably stated more than 24 times and is located in at least 3 or 4 different major sections, right? So this is an area that U.S. Department of Labor continues to review and emphasize, and we have had at least 3 formal monitorings, which I know many of you on the call have been a part of, and thank you for your cooperation with those monitoring reviews that have noted some some technical concerns, and that's one of the reasons we're doing this today, is to just, again, we know that we have this information out there, but just to emphasize that it is certainly all of these technical details are being looked at very, very closely, and so bottom line here is, no matter which method you use, you must ensure that uniform guidance is followed, and your procedures are followed, and we're going to talk a little bit about those considerations in a minute, and that everything is done that is appropriate to ensure competition and document what you have done.
Thanks, John. So to touch base on the sole source criteria, we know that there are multiple procurement methods, but sole source is considered the last resort according to the federal guidance. So even if you have to use a sole source, it has to be consistent with the local procurement policies still. And it only can happen if service is really only available through one single source. It is allowable under public emergencies based on uniform guidance, that if you had to go through a competitive procurement process, the time it would take to do that would delay the ability to actually perform the services or achieve the competitive selection. So that's an exception. It wouldn't normally apply, but in cases of public emergencies, there could be some exceptions for sole source under the uniform guidance. There's also on the slide there that the federal awarding agency or pass-through entity, if you get authorization to do the sole source or the non-competitive proposal, then that could be allowable if you got that clearance. Or if after, which does happen sometimes, that you have tried to do a competitive procurement process through a request for proposal or RFP, and you didn't get sufficient responses. So sometimes it happens where there's really only one entity that responded or that can fulfill the needs of a one-stop operator as required under the law and the guidance. So that happens, and that's allowable if you go through all these other requirements to document it and get that clearance. On the next slide, the local workforce boards, once you get proposals or quotes or whatever it is that's appropriate for your local area, then the board is responsible for ensuring that the proposals the proposed services and scope and time frame and costs are all reasonable, necessary, and allocable. That's kind of the 3 underlying criteria that are most understood under the uniform guidance: reasonable, necessary, and allocable. On the next slide is what procurement processes may not restrict competition, and this is what John started to speak to. It's very clear in the law, in the regulations, that you cannot make it difficult to propose the services and respond to a request for quote or proposal or whatever mechanism is used. You cannot make it more burdensome than it needs to be. You can't require unnecessary experience or excessive bonding that would prevent someone from being able to respond. No, you can't make the pricing practices not competitive between the affiliated companies. No non-competitive contracts to consultants that are on retainer, so you can't just say this person's on retainer, we're going to give them the contract. It has to be its own procurement. You can't have conflicts of interest, which we'll talk about in a little bit more, and then no arbitrary action in the procurement process. So, John, would you like to give an example here that we talked about in the
and so what we've got listed here is, and this actually was one in one agreement where it was required that the responses come back from an Illinois-based entity, and per the uniform guidance, that isn't allowed. Now, we can require certainly that the services are provided by an individual that that is providing the services on site, right? Obviously maybe a bit different in COVID times, but the expectation is that you will outline in the specifications of your RFP or other procurement document or offer, that will require an offer that will, outline how they will fulfill your requirements. But you can't have those, specific requirements to say must be Illinois or must be a company based within the, the 3 counties of your local area or other geographic restrictions like that. That would be considered a defect that would knock out the procurement.
Thank you. So let's look a little bit more at what conflict of interest actually means in the procurement in some very practical ways. One is the people who are involved in the procurement process can't have some kind of interest in the outcome, financial or otherwise. And any real or apparent conflicts of interest have to be disclosed and documented. And then the procurement process, anyone who might have a conflict of interest has to recuse himself or herself from the process, and again, that should be documented. So if you're like me, I don't like to use words thinking we know what they mean. We need to know what they actually mean, and so what is a conflict of interest in procurement of the one-stop operator? So it's when the actions are taken or appear to be taken by anyone who is involved in more than one role, and those activities could affect its interest in its other role. It could benefit in some way in its other role by being involved in the procurement process of the one-stop operator. So therefore, that would compromise the objectivity and impartiality of the procurement process if someone involved had an interest in the outcome that would benefit them in another role that they play. So John, again, would you give us a realistic example from the real world?
Yeah, so especially as they are reviewed in the monitoring context, the Department of Labor is looking very closely at the consortium model, and we know that the different core and required partners assist the board in many different ways, and one of the chief concerns that many have within the Department of Labor is that there is this kind of carryover mentality from WIOA, right, where the old operators are like kind of grandfathered in, And so this is really, especially during this first set of procurements, was an area that I think many of you, were aware of and we worked with. So if you have a consortium of 3 of the 4 core partners, that kind of takes a lot of the those subject matter experts off the table, right, for the development of an RFP. And those same subject matter experts may be folks that a local board really count on in assisting in some of these technical tasks, such as running a formal procurement. So some examples where local areas in Illinois have done a really good job is that they've made agreements with other local areas to run the procurement. They've used the county, a different unit within a county. If they were in a county government, they've hired a consultant to do the work. And so those are just a couple of examples. And I think that, by and large, we've really controlled for this concern. And we just emphasize in this slide that this is a continued area of emphasis again. So for the next procurement, that same level of scrutiny will be there. And so again, if you followed one of these methods, I would stay the course.
Thanks, John. So then there's another term on the next slide about what's a firewall. That's a common word seen in the regulations and in the TGOL. And, we can easily think we know what that means, but what does it actually mean in practice? So a firewall, one definition is policies and procedures that demonstrate the selection process was impartial and it protected against undue influence. So some firewall examples are on that green box. Clear separation of duties, documented clear reporting hierarchy, conflict of interest policy is documented and handy. Conflict of interest disclosure agreements are documented and handy. And John, would you like to explain the multifunction agreement?
Yeah, and I'll give a nod to, I think I saw Laura Dom is on the webinar, and this is really a nod to her and for developing this document, which I know many areas have in place. And so really it is a document that shows the specific roles, and it is an important document that we use in the monitoring context because it does do, I think, a very good job of outlining, especially even those that have the, these are the roles that we won't do. These are the things that we will do. And so it really, it lays out all of the different roles and responsibilities. So there is really no question. And I think it is really a foundational piece to ensuring, those or controlling, helping to control for those conflicts of interest.
Thank you. So this is closing on this conflict of interest topic. The people involved in the procurement process must be governed by written standards and include the firewall to mitigate conflicts of interest. So that's the formal way of saying document, document, document. Yep. And use those documents as your guide to the way that you navigate these procurement processes and train people who are going to be involved in them. And no entity that helps in the RFP can, or evaluates the RFP can compete in the procurement itself. It's a little self-explanatory, but also very clearly not allowed. So, John, do you want to offer some examples from our green box here again?
Yeah, and I think we may be a slide behind.
Oh, excuse me. I'm sorry.
It's okay. Yeah. So, yeah. Again, I think that just having everything, as you mentioned, I think documented, and I would just say those OEAs that have those multifunction agreements in place, which I know many of you do. Again, we continue to keep those updated, and especially if roles and responsibilities have changed. It's important to keep those documented as you move forward. you know, you know, good time to review those documents will be, you know, when you do your renewals, right? So number one, I should say when you do your initial procurement to establish the operator agreement, and then number two, when you do a renewal, you should assess like what are the requirements of the one-stop operator and what are the roles and responsibilities of all of the of partners, not only within the procurement process, but then also in the implementation and the oversight phases as well within the procurement.
Thank you. And John, if you would, the TEGL describes planning phases. So I think you're all very familiar with this, but thought it might be helpful to kind of revisit.
Yeah, and for sure the phases and the TEGL really does, and I know we've mentioned on other webinars before, the TEGL does state that it really is focused around the one-stop operator, but it suggests that you use a similar approach with other procurements, such as, you know, service provider contracts or you know, other services you're looking to obtain. And they offer a kind of a logical process of the procurement and all of the you know, considerations or boxes that you should check. You know, one thing that you know is emphasized at every step is to document you know, what you have done and how you have engaged the right people and controlled for conflicts of interest at every stage.
Thank you. So that brings us to our next part or section of this webinar. So we talked about the procurement. Now, once you procure the one-stop operator, what does the agreement look like? So what we thought we would do is walk you through some of the requirements that need to be in the actual agreement itself and show you a sample that you can use and tailor, but it really bakes in some of those, the minimum requirements are in this sample one-stop operator agreement, and there's an appendix that, John, if you, on the next slide, it kind of outlines what the components are, and then John will share his screen and walk you through what the sample agreement looks like.
Yeah, thanks. And so you know, what we've done over the last couple of years as part of our monitorings, we've seen a number of different agreements, and as part of our ongoing discussions with USDOL and the other state partners, you know, we've come to the realization that we really need to have a good example to show, and that's what we've provided. You're not required to utilize this agreement, but we took a step back and we looked at the regulations, including uniform guidance, with all of the different elements that are required, and what we are presenting today, our intent to include that. So you know, some of those key highlights in TEGL 1516 is that the OSO is a subrecipient, right? And that you need to include all of those key information points that are outlined in the uniform guidance, and we'll go through that. It must have a statement of work. It must have a contract amount. Must have a term of the agreement. Must have a method of payment. Must have a payment process, and it must be a legally binding contract. And so I know as part of our monitoring, we've seen you know, a wide range of agreements as it relates to level of formality. And so again, this is just an example, especially as you look at your next round of procurements to consider. As Bethany pointed out, you are required to utilize your local procurement procedures. And so this template is not intended to supersede those requirements, and we would encourage you to customize, this or similar templates, for those or for that purpose. So I'm going to go ahead and hope I can share my screen here. Okay. So hopefully you should be seeing now it's a Word document, subrecipient agreements,
Yes.
where it kind of outlines the recitals here on the first page. It talks about kind of the authorization under the Workforce Innovation Opportunity Act. It talks about who the parties are, and that's important because of it is a legal agreement with the different one-stop operator partners and the board or their designated fiscal agent. It does and should talk about the physical location of the one-stop, and should talk about how the board has selected the entity, the one-stop operator, through a competitive process. So the next piece of this, talks about the one-stop operator will perform the services that are the scope of work, which is Appendix A, which we'll get to, but that should be seen as like a 30,000-foot overview of the services that the one-stop operator would provide. Another key element, it includes that period of performance and then also the renewal provisions. And we're going to talk about this in the webinar, but one of the things that I know DOL is also going to focus on is that there's evidence that the local board is reviewing the performance of the one-stop operator, that it isn't just an automatic renewal, and that you are taking taking the renewal requirements of that the OSO is operating satisfactory or to the standards set by the board, as the determination as to whether the contract is renewed. Okay, so cost and payment provisions. We're going to talk a bit more about this later in the webinar, and so for many of you who are consortium members, this is what Bethany was referring to as it relates to some specific strategies associated with the transfer or the documentation of costs associated with the provision of one-stop operator services. Okay, so we are still working with the U.S. Department of Labor to verify the applicability of this section. It is the state's position that costs can be provided in cash, non-cash, and in kind, as outlined in other parts of the regulations. But we'll get into this more in other areas of the webinar. But the key is, and one of the deficiencies in several of the current or some of the one-stop operator agreements that were reviewed is that the cost and payment provisions were not included at all. There was just silent. The agreements were silent regarding the cost and payment provisions. So that must be included in your agreement, whether those costs, as I said, are cash, non-cash, or in kind. The next section is really more of a boilerplate, but it is important, and it's noted especially for some more of those innovative one-stop operators, right? So if they develop a process or you know, a great new method of serving you know, the customers, but then want to go and make it proprietary, and that's not allowed, because you know, if we paid for it you know, with federal taxpayer dollars, then the whole system is entitled to benefit you know, from that product or method. And that's a standard term in all of our or at least the Title I and Title III grants, I believe, those are standard terms. There must be a termination provision, and we also include, as part of kind of the standard boilerplate, information about records, keeping work product expectations and documentations. We've also added and would recommend that you add a section around the protection of personally identifiable information, right? A one-stop operator, one of their major functions, right, is to coordinate activities with your job seekers and businesses, and you're dealing with confidential information. And so you need to make sure you have those structures in place, and that they are bound, and would recommend strongly that you include this provision within your one-stop operator agreement. Liability, again, these are just some of the standard recommendations around you know, some liability provisions. Let's see. General provisions. These are, you know, more on the along the lines of federal requirements for non-discrimination. They're pretty straightforward. Again, you may have local provisions that your county or your entity, if you are a nonprofit, that you utilize, and you know, you can customize this template in the way that you see fit. Again, these are just kind of standard, just kind of good things to consider, but again, not. I would say actually the amendments or revisions, that's a must-have, and legal authority, that is noted throughout the agreement. So then Appendix A of the sample agreement includes your scope of work, which again just outlines those critical functions. And what we've done is we've reviewed many of the existing agreements that are out there, and we took a lot of those activities, right, or those tasks that a one-stop operator you know, perform, and we have listed it here. So it's kind of a library. So we know that this may be much more broad-based than your local area is looking for. So again, our expectation is you don't have to include all of these tasks, because, you know, perhaps that, you know, prices an entity out of your budget range. So again, there are some required tasks that we, you know, I think we went through in the webinar here, but you are able to customize this list. We would recommend that you develop a management plan for each workforce center that takes this 30,000-foot scope of work and breaks it down into you know, some kind of day-to-day or, you know, week-to-week, month-to-month type of expectations to, you know, kind of you know, provide little more detail to that. And then, talking about the reports, right? So there should be that communication between the one-stop operator and their different partners, as well as the board and chief elected officials. Then moving to the budget, this is an area that I think, again, we identified a number of weaknesses that this is intended to address. And so we include, some of the standard terms that should be in every agreement, right? So you should include the, the reference to the allowability around 2 CFR 200, as well as the federal funding source. And so, especially if you are a consortium and you have multiple sources that are contributing to this award, right? You may need to repeat this whole section. So you'd have to complete all of this for your Title I award, and then you may have to complete a whole other section for your Title II and 4, if those are your 3 consortium partners. And we're definitely able to assist once you get that far if you have questions. The pricing must be included, and the invoicing, whether it's if it's going to be monthly, quarterly, semi-annually, or whatever it is. Again, another issue that we that was pointed out is not being as strong as it needed to be. And then the payments. This last paragraph here again really speaks to that ongoing discussion that Bethany referred to that we're having with USDOL. And we are hoping that their fiscal confirms our interpretation of the ability to utilize cash, non-cash, and in-kind contributions as shared costs, because under the regs, or under our reading of the regs, we do see the one-stop operator is a shared cost that subject to contributions of cash, non-cash, and in kind. So that is a very detailed overview of this document. And Bethany, I think I'll turn it over to you.
Yeah, we're back on slide 34 there. Thanks, John. And that document's available for download both from this webinar, but also posted on the WIOA implementation portal, or it will be soon if it's not already. So you can use that document and work with it, as John mentioned. So how that relates to our last section is the payment provisions. We touched on that in what it says in the one-stop operator agreement that is required, the terms, the frequency of payment, and everything else John just went over. But how does that translate now to the annual agreement? If it's a shared cost among the partners, which it can be as an additional cost to the service delivery system, then how is that reflected in the MOU and the annual budget? So that's where the supplemental guidance comes in to say, there's some new provisions in both the MOU template, the narrative, as well as the budget spreadsheet that speak to this, just spelling it out. Who contributes and what are they contributing, and how is that cost, how is that contribution made, cash, non-cash, or third-party in-kind. So as John said, we're still in conversations with DOL. In the meantime, we are moving forward with these, which we think are good practices regardless to do. So on the next slide, this is the new, you can just go one more slide for me. This is the new section of the MOU template, the narrative that is required, and it's highlighted in blue and pink font to let you know that that is the new content. And it's just spelling out, similar to what you will have in your one-stop operator agreements, it needs to be reflected in the MOU because the MOU is a contract for payment, and it needs to be transparent about how the partners, if they're sharing in the cost of the one-stop operator, how is that happening? What are the terms of frequency? what is the total cost and how does that break out, who's paying towards it, is it all partners or just some, and what is the method of contribution. It needs to be spelled out in the narrative so that can be a standalone contract for payment document. On the next slide, then we get into the budget spreadsheet and an invoice, a sample invoice that's provided as part of the governor's guidelines, the supplemental guidance for PY 2021. So let me walk you through those, and Mike Baker's on with me if we want to jog his memory too about some of this. So you can go to the next slide. The supplemental guidance spells out two new things in the budget spreadsheet. And when I say budget spreadsheet, I mean the one-stop operating budget spreadsheet, which is also considered the infrastructure funding agreement. So there's two new things in there. On the main tab that shows the total shared costs across all centers, for example, there's a few new rows or a handful of new rows that are specific to the one-stop operator as a shared cost of service delivery system. And so these are new rows that show the cash contributions, whether it's cash, non-cash, or in-kind staffing. So rows 88 through 92 are the new ones. They're in the blue box there, and they just kind of sum all the contribution methods that if the cost is allocated out among the partners, this is the sum of all of the partners contributing towards that cost. So that's tab B, which is added across all centers. But what I really want to show you is the next slide, and then I can consider sharing my screen, but I realize we're running a little tight on time here. But the one-stop operator agreement, remember, the budget that John showed in the one-stop operator agreement template, that is over the full term of the one-stop operator agreement. So it could be up to 4 years. Now think of this new tab in the budget spreadsheet for the MOU budget. This is the annual snapshot of how partners are contributing towards that cost. So there's a couple things that you have to know here, that this is tab D2. So let's say this is specific to a specific center. In that blue column there on the left, it's column C, that shows the total amount that is in the one-stop operator agreement for the full term. Then everything to the right of that, what's highlighted in the green box, is partners' annual contributions towards that cost. So it's basically an annual look at what everyone's going to contribute. So to do this, to plug in the data, the first step is to determine the amount owed by all the partners. And then the second step is to indicate the amount owed and the contribution method toward it, right? So that's the two steps. The reminder here is that the amount in the D2, this tab, this new tab, has to be manually entered into the new rows for rows 89 through 91 on the previous tab, on tab D. So once you enter in the total amount that has to be allocated out, then you can look at the allocation out based on FTEs. The FTEs are the allocation method, and that allows a percentage to be split among all the partners who are contributing. Now we know this is different for partners, areas where only a portion of the partners are contributing. Let's say 3 partners are contributing toward the cost of the one-stop operator, versus a local area where all 16 required partners receive a fair allocation of the cost, the total cost. So we want to show you some examples of what that looks like. On the next slide, so this is an example when all the partners are sharing in the cost. It's just an allocation based on the FTEs, so everyone gets a proportion according to their number of FTEs offering services through the one-stop. So the first step is to determine the amount owed by all the partners, and then manually enter the percentages in Row 25 is that bottom row. It's probably very difficult to see on the screen, but row 25 says partner percentage of total FTEs. You manually enter in that percentage, and then it calculates everything else for you in terms of the share and the amount owed. And as Mike graciously annotated this slide for us to spell it out so that in case you need this as a resource going forward, there's some dot points on there that give you some pointers about what each of these rows does and which one you annually enter and which ones you auto-populate for you.
Bethany, this is Mike. I'm not sure if I heard you correctly, but I want to clarify. If you're doing this methodology, the spreadsheet does the work for you. So you plug in, the only amount you really need to plug in is cell E23, and then row 25 is calculated for you.
Thank you for clarifying. Yeah, I think, thank you.
Yep. If you do it the other way, it doesn't. But if everybody does OSO cost with this methodology, you just have to hand plug in this 10.25 number or whatever the number is for your area, and it will do the rest, and it will populate the table above by line item, by partner. So it does all the work for you.
So the trick is follow the red box. What's in the red box, follow that methodology, and that will get you the auto-populated amount that then you can use as the annual contribution to document each partner's contribution towards it. The cost, the shared cost. So on the next slide is the similar example, but this is when only a certain portion of the partners, so let's say 3 partners are contributing towards it. So again, the red box outlines the steps to take, what you manually enter in row 25, and then what is automatically populated after that. Mike, is there anything else you would want to offer before I move on to the last section about invoices, just about the budget spreadsheet? You know, we are running a little tight on time, so I didn't do the full sharing and walking through the functionality, but if there's anything else you'd like to add, please feel free.
No, you hit it on the head. Just follow the dot points in the red boxes and you should be good. But we're here to help if you have any questions later on.
Thanks, Mike. Okay, this last section here is about the invoice. The red box on the previous slide talks about how this invoice can be used as a template. Could you go back to slide 42 for me, Kirsten? Thank you. There's a sample template that's provided as part of the supplemental guidance for PY 2021 that says, what does it look like if we dedicate invoice to just a partner's contribution towards one-stop operator costs? That is an option. The other option is to, in an invoice that is sent for costs incurred, shared costs incurred, you could have a one-stop operator line item, but that would just be one line item on a, an invoice of many other line items that are related to other shared costs. The example that's on the screen here is that if you want to dedicate an invoice just to one-stop operator contributions of a partner towards of a partner's contribution towards one-stop operator costs, this is what you could play around with and see what works in your local area. The point is for this invoice to mirror the budget in the MOU budget spreadsheet, so that it's an annual look at what would be owed by a partner and how are those contributions being made. Is it cash or non-cash? And if it is non-cash, then yeah, your invoice could end up being a $0 amount owed, and that could be okay because it's tracing through what the partner's contribution and the value of those contributions are, and those were agreed upon as part of the MOU. And now, again, this is subject to a continued conversation with the U.S. Department of Labor, but in the meantime, we're suggesting this as an opportunity to just be transparent, at least if it's a non-cash contribution, how is that value being determined and actually contributed. So that invoice for you is available for download, and it's editable so you can tailor it to what fits your area. But the best situation is that you would align this with the line items as they appear in the MOU tab that we just went over. There are some other frequently asked questions that were asked in the previous webinars, so we thought we would take an opportunity just to address them here. They're also posted on the WIOA implementation portal, so you can refer back to those anytime. But when do these one-stop operator payment provisions take effect? The answer is the MOUs that are being amended now for the PY20, they have to be amended annually anyway to amend the budget for PY 2021 into the MOU, so we're saying start that now. Start when you prepare your MOU amendment for PY 2021 with the PY 2021 cost sharing agreements. Start utilizing these templates for that amendment. On the next slide, do the current PY20 MOUs that are active right now have to be do they have to be amended to reflect these new one-stop operating budgets and the new rows? The answer is no. The PY20 budget itself doesn't have to be amended to accommodate these new rows, but when you start to prepare your PY 2021 budget spreadsheet, yes, you have to use that new template with those new rows. And the next slide is, what if you don't include one-stop operator cost as a shared cost in the MOU? Well, the DOL made it clear that regardless of whether the OSO model is a consortium of partners or a single entity, that the payment provisions have to be spelled out anyway. So we think it's best in the PY 2021 MOU and the budget spreadsheet to identify the full cost of the one-stop operator and then indicate whether it's a shared cost or not. There's boxes, there's a note section that describes it. There's a section in the MOU narrative where you can describe it. If it's not a shared cost, just specify that, and the budget spreadsheet will align with that. But we're trying to accommodate all situations so we get an accurate reflection of the cost of operating the local system and what partners are contributing towards what cost. And then if you're still working on revisions to your MOU for program year 2020, the current year, I think it's all actually been done by now, but any documents that you need are available on that Documents and Updates page on the WIOA implementation portal, and that link is live if you want to click that to take you right to that page. And on the next slide, this is where you also can receive that. If you go onto the WIOA implementation portal and don't know where to go, the red arrow shows you under all resources, there's a WIOA documents and updates and other resources there related to the governor's guidelines, MOUs, other forms. You can just go there anytime, and those documents are all available for you, downloaded in the most recent versions. Okay, well, I know that we went a little over on the scheduled time, so we understand you have been entering some questions into the chat box, and we can commit to reading those over as a TA team and get back to you in writing if that's helpful. Or if it's just specific to your local area, we can have an offline conversation about that. But I will pause and just see if there's any questions, John, you think we should are able to respond to live here. And if not, we'll just go address them in writing after this webinar.
John, I'm not sure if you are able to see the chat for these questions coming through.
Yes, I'm just looking at that now. Okay, so I think there was a question regarding a sole source. So if a board issued an RFP and it only had one bidder, even if the RFP funding notice was sent out to multiple agencies, is it acceptable as long as there is documentation such in the bidders list? That's a great question. And so the answer is it may be acceptable, right? I would definitely refer you back to TEGL 1516 and note that technically when you only get one bidder, the uniform guidance technically classifies that as a non-competitive procurement, and that you must must maintain that additional documentation, right? That must prepare and maintain written documentation regarding the entire selection process, right? And so there should be kind of a very careful examination of the process, right, including the RFP and making sure basically that you've done everything in your power to spur on competition, and that you still only have one entity that comes in. And also one of the slides talked about that sunshine provision, right? And that it should be, if it is only a sole source, there is discussion around making sure that that decision is affirmed by the board, right? And that there is a full discussion of that analysis within the board, and that even the fact that you may want to analyze if a renewal or the term of the OSO is appropriate to have multiple year renewal options with that, or perhaps the board would take a very close look at the renewals if there was a limited or only one proposal that came in. So again, I'd refer you back to those very specific documentation requirements in TEAL 1516. Let's see here. Looks like there's a question about if the OSO costs have to be spread across the partners. And Bethany, do you want to take that one?
Yeah, so there's not a requirement for the one-stop operator cost to be shared among partners. It has to be an agreed upon shared cost, and it's an allowable shared cost as an additional service delivery system cost. So it's not a requirement to, but even if you don't share it across, across all partners, the point is that it still needs to be documented in the MOU how the one-stop operator is being paid, and any partners, if they were contributing, or even if they're not, just spell that out in the budget spreadsheet notes and in the MOU narrative, and you're safe.
Right. There was another question about, there were a number of LWIAs when we reviewed the process in 2018 that had to reprocure. And because of that, their agreements go through 2022. Question is, do we need to reprocure? That is correct, perhaps. It depends on the terms of the agreement, right? So if your award was for the full allowable 4 years, then that is true. But if you have renewal clauses, you need to follow your procedures in those renewals. And importantly, part of that requirement is that there should be continued monitoring, right? There's a discussion around how the board should be monitoring their satisfaction with the services that are provided by the one-stop operator. So it shouldn't just be an automatic renewal. In other words, there should be some monitoring and analysis to make that decision.
Okay.
I think that's all I see in the chat here. I think the others may have been answered.
And any others, when we see the full version of the chat, we can respond to those again in writing in the frequently asked questions page of the portal. On the next page, Kirsten, if you go to the next page, I think we actually, oh, never mind. I intended to paste the frequently asked questions link in there. but it's on the WIOA implementation portal. Just click on the FAQ, enter your question, and that way it really gets a good vetting and can respond, and we can put in an answer in writing for the benefit of all to see. So please feel free to use that frequently asked questions document. You're welcome to contact me as part of the WIOA WIOA Interagency team, and we work with all the partners to think through the best response that offers the most clarity to you. So please feel free to do either.
Yeah. And so, Bethany, there are a couple more if we've got some time, and I understand if folks have to jump off, but I do want to answer them while we're here.
Sure.
There was a question, do we have to do a new OSO agreement to implement the changes or include the changes in our next agreement? We would recommend at the time of your next, kind of the next break, right? So if you have a renewal, you should update your agreement at that point. If you're going through a whole new procurement, then you should, at a minimum, have those components within your either in your renewal agreement or in your new agreements. And again, customize that based on your local procurement requirements, and you're welcome to utilize the template if you have that flexibility. Another question, what are some popular models of a firewall? I'm going to defer that question. We may post that in the FAQ. I want to talk to our resident firewall expert, Laura Dom, to get some good resources for that one. And we'll also share, there's a question if we can share the tools that we utilize for the OSO monitoring. We can certainly do that. Title I had a template that we reviewed as part of the review of the procurement process. We can share that. But you also at a local level should have monitoring templates or guides that review your current contracts, whether they're a service provider or youth contract or other contracts. I would definitely encourage you to use that as a starting point. And again, I think the Teagle 1516 emphasize that the considerations that are outlined, as it relates to procurement, expand just beyond the one-stop operator. So that type of analysis that you provide, for like a youth provider, and to see like, are they performing? Are they doing the things that are outlined in their scope of work? And does it warrant a renewal? So that's really, I think, a renewal. That analysis rather than kind of a rubber stamp renewal. Okay. All right, and then there was a question around the chat to be copied. Yeah, we can probably work on that. And then I think there was one other question. And so actually I did, there was a question about if local, let's see, the question was, if a Title I member is a member of a consortium, are they unable to negotiate performance measures? Each, and Mark Burgess with our Title I performance team helped me with this response here. Each local area needs to identify a local negotiation team that would consist of the CEO, board chair or members, and local board staff, including the one-stop operator, Title I administrator, and so on and so forth. We wouldn't see that as a conflict if you are in this consortium as part of the OSO. At the state level, at least for Title we negotiate our goals with DOL, and for our understanding, we don't see that as a conflict of interest. Is really the bottom line there.
Yeah, I wonder. I'm sorry, I was going to offer one. It might be a clarification, John. There's something that we said in a previous slide, said someone who is participating in the consortium can't help set the performance, but it was related to the performance of the one-stop operator. So not performance goals for, you know, the measurable skills gains types goals, but like the performance of the one-stop operator and evaluation of whether that one-stop operator is meeting your needs. So I think it related to that slide.
Gotcha.
I'm wondering. I can point that out.
Yep, that makes sense. That makes sense. Okay, and I see actually we've got a couple other questions that came in the Q&A piece. Let's see, that want to know the slide 46 indicates the OSO costs need to be included in the MOU budget, but those costs do not have to be shared by all of the partners. That is correct.
Mm-hmm. Yeah, we want the one-stop operator cost in the MOU budget because that's what it actually costs to operate the center and operate the delivery system, service delivery system. So even if partners are not, even if it's not a cost that's allocated out, we want it reflected in the budget. So I know it. That's really what the situation is.
Yeah. All right, and then another question, must the OSO procurement process be completed prior to the submission of the report of outcomes on April 15th, since the OSO cost is included in the budget, and the budget must be agreed upon by the partners by this date, unless agreement cannot be reached. Thoughts on that one?
I think I need a little more time to think it through and provide a good answer.
Yeah.
But, you know, just to be safe, I think we'll take that one offline and get a response in writing just to make sure that we're thinking through and don't cause any undue back and forth.
Right, exactly. Yeah, we'll put a pin in that, and then we'll respond in the FAQ. And then I think the last cycle of the boards were required to include the total amount available for the OSO contract in the RFP. Is this still required? Absolutely, yes. And actually that is, so as it relates to within the RFP, there must be, you must include all of the services that you want to procure, and you must include a dollar amount or a range, right, that you or the board will provide for those services. That was actually a common defect that DOL required a reprocurement on when we looked at this back in 2017, 2018. So the answer to that is absolutely your RFP or whatever procurement method you utilize, must include that cost to provide, and the idea is that the potential bidders need to know, well, if this contract is only going to be up to $50,000, it's not, that's too small or it's too large, right? So it's to give, proper expectations and to make sure that you have proper competition is the theory, at least, but we'll leave our opinions out of that because we have some.
Hey, John, this is Mike. To clarify that, is it the case where we're looking for a ballpark number or a very specific ceiling?
No, I mean, it could be a number has to be provided. It could be a range, right? So, and the range and the number that is, the anticipated award amount, right, in your RFP, you should list, these are the things that we want. And it is anticipated that the board will award, up to an amount. You could write it that way, or you could write it, it's anticipated that the board will, fund between X amount and X amount for the services outlined in, list of required services, whatever, right?
Or could they say, we anticipate these costs to be in the range of 25,000 to 45,000?
That's right. That's right. That's putting it in real numbers. Absolutely. Okay, I think those are all the Q&As. I think we have the chat cleared. So I think that's it.
Well,
All
special
right.
thank you to everyone for joining today and listening to this rather dense webinar. We know it's very technical and regulatory heavy. So thanks for bearing with us, and we hope that it was helpful. Just contact us if we can be helpful in any other way. So thank you.
Yes.
Thank
Thank you all. Have a great week.
Yeah, I wanted to thank our presenters for today. I really appreciate it. This was great content. I know it was heavy in information, but information that's important and relevant. And thank you to all of our attendees for coming today and taking time out of your workday. We appreciate it. And we wish everyone a healthy and happy holiday season that's coming up. And also, I did want to just reiterate, I put the survey in the chat. If you have a couple minutes to go ahead and give us some feedback, or if you have any questions, you can put those in the survey. That same survey will go out in a follow-up email tomorrow afternoon. And then the recording from today will be up by Monday morning. So look for that as well on our center's website and the WorkNet website. Thank you, everyone. Have a great rest of your afternoon.
Thank you.